Recent data is coming out and it is screaming the consumer is in some major trouble. And it's not just one data point, it's not just two data points, it's multiple that is showing that the consumer is bleeding out. So, will this rate cut from Jerome too slow Powell, did it help? And will it potentially give some breathing room for the consumer? We're going to get into all of that. But first, let's go over some of these shocking statistics that I have found here. The first one being credit card debt being searched more than the 2008 financial crisis. Now, with this, right? So, comparatively, Google searches are at 2008 levels, and the share of credit card debt that is delinquent 90 days has reached 12.3%, its highest since 2011. This is just 1.4% below the all-time high. So the consumer is bleeding out with credit card debt that is near the all-time high mark, and that's not where it stops there. We also see this Google search trend help with mortgage drastically going up, as well as we're seeing this skyrocket up. Now, let's take a step back here, folks, because everybody knows, okay, Google isn't the number one search engine, or it is still, but it is coming down because people are utilizing ChatGPT more. So this is actually a lot worse than it seems, because in 2008, Google was the only dog in the house. So now we are seeing multiple players come in, Google and ChatGPT and some of these other AI searches, and these Google search terms are going way up past the 2008 levels. And now let's take a step back and think, okay, if this is all going on, how is the overall market looking? And I'm going to be going over this, so make sure you guys are smoking the like and hitting the subscribe button, because I know 93% of you guys who are here are not. So help me get to 1K. But the shocking stat of the day is that the global stock market has reached a $143 trillion market cap. So the low value, and it's skyrocketed 31%. Global markets have added a whopping $83 trillion in value, rising 137% since the 2020 low. At the current stock market pace, the gap will exceed 100 trillion by the end of 25. As a result, world stocks will surpass 150 trillion for the first time in history. So we're living through a historic global bull run. And then on top of it, we've got the consumer bleeding out, where the share of the top 10% of US consumers now account for 49% of all consumer spending. So let's take a step back here, folks, because it's showing that the top 10% of people are just spending money willy-nilly, but the bottom 90%, on the other hand, they've got everybody in a chokehold because they are not spending at all. So by comparison, at the end of Q4 in 2019, it was 43%. So we're already 6% higher. Over the last 3 decades, this percentage has risen by 13 points. So consumer spending reflects 68% of the US GDP. That means the wealthiest 10% now roughly drive 1/3 of the entire economy. Can you believe that? 10% of people now drive a third of the US GDP. So when they're screaming tax the rich, and then they're complaining that the GDP is not there, well, I mean, look at the facts here, folks. They're all like the top 10% of the stocks, or the top 10 are killing the S&P 490. The top 10% wealthiest individuals are killing the rest of the 90% because they're just wheeling and dealing money left and right. Yet we have credit card debt at all-time high. We have some other debt that I'm going to get into in a minute, so make sure you're sticking around to the end of this video. And then we have the potential of people needing help with their mortgages coming soon. So the consumer is bleeding out with all of this, and the wealthy individuals are riding this up. You know why? Well, because we're seeing the S&P 500 shoot up. So they're able to borrow against their assets and continue seeing this go up and up and up. Now, this is something that, we're going to continue to see as it's coming along here, but it's something that I hope is not going to be a growing trend, because the wealth divide is now at unprecedented levels. Now, let's explain this unemployment rate, because a lot of people have been keeping a very close eye on the unemployment rate, because even Jerome Powell, let's get to what he said here the other day, because Jerome Powell, he said that unemployment, it's not too bad. It's actually at decent levels. Well, when you take a look underneath the hood, well, let's look at it, right? So, Wells Fargo, what are they saying about unemployment? Wells Fargo is saying that the report requested a pause on mortgage payment 2 times in the past 3 months. Complaints to the CFPB, the U.S. consumer watchdog, about mortgage payment problems are up 42%. Analysts at Moody's warn that if unemployment goes over 6%, which is about 1.8% where it is right now, home prices could fall 10 to 15% from people being forced to sell. And then we see the unemployment rate keep on going up to 4.3%. But if you look under the surface, the issue is clearly that 16 to 24-year-olds, 25 to 54, and 55 and over, both unemployment rates are a little bit lower. So the younger people aren't working. They're limiting the, let's call it, the minimum wage jobs, right? So I think this is where everybody was screaming, and this is what the data points to. So everybody was screaming, we need to raise the minimum wage in the United States, which I'm not arguing we don't need to. But if you look at the majority of minimum wage workers, they are 16 to 24. They're inexperienced, and they don't have any qualifications, no college degree, not even high school yet. They're just kind of getting into the swing of things. So people are trying to find ways to automate those positions, the lower end positions. And it would require you to now be more advanced, have some sort of skill set, do all these different things. And look at what we're seeing. Well, we're seeing that lay over into the unemployment, because people don't want to pay this increased minimum wage. Well, we're starting to see that go up. So now if we take a step back, we look at the consumer credit, that continues to keep on jumping up. In July, it was at 5.06 trillion, the third highest on record. This marks the second largest monthly increase of the year, up from 9.6 billion in June. So over the last 5 months, consumer credit surged 103 billion. So this revolving debt, which includes credit cards, rose to 10 billion. So this 1.3 trillion is the highest that we've seen since November 2024. It's not a revolving credit. It includes auto, student loans, increased 6 billion to a record of 3.75 trillion. The consumer debt mountain keeps on growing. And then on top of it, we have student loan defaults keep on rising up. Student loan defaults rising sharply, with the New York Fed reporting 10.2 of aggregate student loan debt delinquencies in Q2 2025. So the Department of Education is anticipating nearly $10 million or nearly 10 million borrowers in default soon. Factors contributing to the rise include the end of COVID-19 forbearance, with millions of borrowers now in various stages of non-payment. Historically, default rates have been higher at for-profit institutions and borrowers who do not complete their degrees. Now, all this is coming right after we cut interest rates here the other day. So, as All Nighter Hider in the chat is saying, unemployment is at 8.1%, and it is trending up. I do think we're going to get a global melt up, because that is what we're seeing, right? We're seeing asset prices skyrocket in flight and absolutely take off. But like you're saying, people will most likely not be forced to sell their homes with record equity in ownership. Now, if they did, this would start, I think, a bum rush or a gold rush in the real estate market. Honestly, would potentially crash the market. We're seeing that. And, I mean, I'm speaking to a lot of people. I'm going to some networking events here lately. And just from talking to them, it seems like it's a quote unquote normal market where we're seeing a lot of, houses stay on the market for 30, 40, 50 days, which is not paranormal. It's not the COVID market, which we saw houses getting flying off of shelves and honestly getting well over asking prices, hundreds of thousands of dollars over that asking price. No, no, no. It's much different than what we're seeing, right? So homes, I think, will not be forced to sell. But when we're seeing the Fed cut interest rates, and now it's a 94.1% chance we cut 25 basis points. There's actually a 5.9% chance we don't now, which I think is interesting because you know, Powell was pretty, I guess, firm in his stance. I know I did a live stream the other day, when I was talking about what Powell was going to say and kind of going over it in real time. Now, I mean, taking a little bit of time to reflect all this, Powell was essentially just telling everybody, hey, you know what? Like, we made the right decision. I think that Trump is pushing us to cut interest rates. And I don't necessarily think the economy is really ready for all that just yet. And so, I think when you look at the jobless claims that we have, it's something that we got to look at, right? The US jobless claims are at 1.292 million in September, and they're estimated to be 1.9 million, 1.95, excuse me. So those are continuing to rise up. You got to keep a close eye on unemployment as that is, getting bigger and bigger. And, it will be something that I think will be a huge talking point, especially with the consumer here. So the consumer's hurting. The dollar, it is up a little bit today, thank God, because we were crashing to like 96. And I think that was like, to me, that's where I get a little worrisome when we're starting to float around the 95. So, I mean, we're seeing the dollar rise up a little bit, but it's still fairly low with all of this. So I think we're seeing weakness in the dollar and the overall economy, still the consumer, and everybody's flocking to these different assets. But hey, Powell is saying it's not a bad economy. It's all the tariffs. AI likely isn't main driver of tougher jobs market, which I do agree on that. But he said he won't comment on anything Secretary Scott Bessent will say. He says the market are pricing in the rate path, though it isn't the rate path. So this is where I think, they're going to look at the data. We'll see how the data turns out, right? I mean, they're always looking at the data, the data, the data. But one thing that they are doing, right, is they're freaking pumping this S&P 500. I mean, it's hitting all-time highs. Powell is looking at all of this and saying, hey, you know what? It's actually pretty nice. We're seeing, this go pretty well. And, we shouldn't necessarily be looking at all of the negative stats. Just look at the positives. These things are going to be great. All this and that. I think it's all a bunch of baloney, man. I think we really need to be watching how the overall market is continuing to, let's call it, go with all of this. And I think the as we're seeing the consumer hurt, jobless claims go up, student loan debt defaults rise up. I think it's really something that we need to be keeping a close eye on. And I'm going to be doing that here on this channel. So make sure you guys are hitting the subscription button with the bell notifications so you guys can join All Nighter Hider in the chat, because he's saying U3 is bogus. U6 are the more accurate unemployment numbers. I mean, to be honest, all this data that we keep going over, man, it is not accurate data. So even though we have Trump saying, you know what, everything's fine, don't worry about it, or Powell saying that, excuse me, Trump is firing people. I mean, the data is just terrible when we see all of these things just get revised on such drastic paths. So I think that I'm gonna be keeping a close eye on this. So make sure you guys are smoking that like, hitting the subscribe button, telling a friend to tell a friend, and I'll catch you guys all at the next one.